Good evening, everyone. This is Melissa. Can you hear me? Welcome. Welcome, everybody. All right, it's 5:33, so let's get started. And I can see everyone's questions in the chat room. If you have any questions, just feel free to write it in there. We have time tonight. I can answer any questions as I'm talking. This is a very interesting class that I'm doing because I'm doing this entire class talking about one specific stock. You'll see what I mean when we get to the example. But I've actually never done this before, and I've wanted to do this for some time, and I decided to do this in one specific stock, and the results were pretty significant. So I think it'll be interesting when we get to the chart examples tonight of what we're talking about. So hi, how are you? Hi everyone, welcome. So I'd like to introduce myself. My name is Melissa. Most of you know me. I own a company called the Stock Swoosh LLC, which is a trading educational firm. And I personally am a trader, and I trade. And I teach a class on gaps and run a live trading room, which I call out trades in and trade myself. So I've been trading since about 2008, and it took me a long time to put together the system I have now. And I'm very proud of that. So we're going to talk about some things tonight. Really basic things at the beginning before we get into the chart examples about gaps. And the topic tonight is why even trade stocks that gap. If you're interested in more information, you can email me or reach out to me at any of these contact places. My email is melissa@thestockswoosh.com. You can go to my YouTube site to see any videos I have on there, or Facebook or Twitter or LinkedIn as well. First of all, we're going to talk about what is a dictionary definition of a gap. I think this is important. I know this is very basic. Many of you know what gaps are. We're going to go over it anyways because some people do not know what a gap is, and it's still good to review it. A gap is a break or opening, an empty space or interval, a wide divergence or disparity. So here's an example. This is actually HPQ that just happened the other day. And this was a gap that just happened here in the second. This is what a gap is. It's a space. It's a divergence, a difference, a disparity, a break in continuity. The night before, the stock closed right up here. This is the close. And then the next morning it opened down here. There was a space. The market's not open 24 hours a day. We have a time when we close and a time when we open. And that's what's on this chart. That's why the candles have opening and closing prices. Otherwise, they wouldn't. There is a pre and post market. I don't have that data here. However, the candlesticks show the 4 o'clock close and the 9:30 in the morning open. And that's what we base a gap off of. It's a difference in disparity from the price of closing of one gap from one stock from one day to the next. And it's as simple as that. People make it out to be complicated, but that's really what a stock gap is. And gaps are also a type of trading strategy, and that's a strategy that I do and teach. So what is a stock gap? It's a type of trading strategy, and every trader needs a trading strategy. What is a trading strategy? It is the reason you are deciding to play ABC stock, whatever that stock is, all right? This is a set of requirements that you are looking for in the stock to make your trading choice. Am I going to play ABC stock today? Let me see. Does it meet the requirements? Yes or no? You have to find a stock that meets the particular parameters, the parameters you've set out for yourself, which is what the strategy is. If you don't have a strategy or any parameters at all, then there is no reason to trade. This is very important. This sounds so basic, but you wouldn't believe how many people trade and trade all day long and have traded for months and weeks and years, and they don't have a strategy at all or don't know what one is. So I'm breaking it down in the basics, even for people that trade, because sometimes we forget, oops, I need a strategy, and this is very important. So I want you to ask yourself right now, what is your trading strategy? Because if you do not have one, it is essential to get one. And every trader, I don't care if you're a day trader, a core trader, a swing trader, a part-time, full-time, anything, every trader needs one. Everyone needs one, no matter what kind of financial medium you trade. Even if you don't trade gaps, if you trade equities, if you trade futures, forex, anything you trade, anything, you need a strategy. Otherwise, there's no point in doing what you're doing. So why trade stocks that gap? Number one, to be on the side of the momentum. That's the one main reason to trade gaps. Number two, to get stocks that will have large moves in the day, big ones. Sometimes they have small ones, but a lot of times they have big ones. This week there was some really big moves and stuff. To trade early in the morning and make profits before lunch. This is another beautiful reason to trade gaps. I'm usually done out of my trades by 11 o'clock at the latest. To learn a strategy that works independently of market direction. This is also very important, especially right now in this market. It is so choppy. If you are trading a strategy that's dependent on the market, you're being chopped up. One day it works, one day it doesn't. One day it works, one day it doesn't. It's a mess if you are relying on the market to help you leverage your positions. The market's been sideways sloppy for since the beginning of the year, to be honest with you. And the other reason I like gaps is to get setups with a precision and detail that is not found in most strategies. And you'll see that as we go through the examples today. And also to have a strategy that sets up often, which gaps do. Gaps set up often. They set up often, and that is really nice because sometimes strategies don't set up that often. What do I mean by not that often? You might not get it maybe 4 or 5 times a month. Some strategies set up. You know, like climactics is an example. Climactics don't happen every day. They don't even happen every week if that happens to be your strategy. So the one nice thing about gaps is that they do set up often. Now, there can be days during the month that there isn't one or a good one to do, but certainly there's a plethora of gaps available on any given week or month. And that's the other reason why I like to do gaps. And it's okay if you don't get one or 2 or 3 days a month because you get so many good ones in between that it's more than enough to trade and make money and make a living. So to me, trading stocks, that gap is less stressful than any other strategy for the reasons I just noted. It's very, very low stress. I know, again, you may think that this is crazy because gaps seem like very complicated, but the reality is once you learn them, they are less stressful because when they happen, they're clear. It's clear, oh, yes, I can see this is gapping. Let me look at it. Yes, it reads the parameters, it rates well, it meets the requirements, therefore I can do it. So the reason that they're less stressful to do once you learn and know what you're looking for, but you have to learn what you're looking for first, is because of large institutional money. That is what's creating the gap in the first place. And let me explain. So how can trading gaps be less stressful than any other way to trade? Any other trading medium, any other thing out there? It's less stressful, and this is why. Because gaps are created with large institutional money, and that is what makes the gap. The professional gaps that happen and play out are formed by one thing and one thing only, and that's large institutional money. Therefore, you need a system that will help you pick the correct direction to play the gap and confirm that the large money will flow with it, that you're getting it in the flow of the larger money. You get the confirmation that the large institutional money is on your side if the gap rates high, and then you play it. So the reason that they're good to play, fun, low stress, easily discernible, is because when you get these gaps, you read and rate the gap, it meets your parameters, and you say, yes, okay, I know now that the institutional money, the large money players, whether they're mutual funds or hedge funds or banks, or all of the above, are on this direction, the direction of the gap, and that therefore that I'm going to play it. And so that creates a less stress because you know that you're going to get in a trade and the move is going to be with you to push you into profitability. Because all we're doing as individual people, we cannot compete whatsoever with this type of institutional money. We are playing with it. In fact, if my trading room had 2,000 people in it, it wouldn't make a hoot of a difference. If we all took the same play and I all called it, it wouldn't make a difference in any of these gaps. It just wouldn't make a hill of beans difference. Why? Because there's no way that even 2,000 individual people could trade all together and have anything to do with this larger money. This big money is so big, there's nothing stopping it. And no amount of individual people is going to have anything to do with this. Now, are we part of the play? Yes. Are we a large part of it? Absolutely not. The gaps are created by big money, and that's what moves them. And traders play on those moves, and that's how traders make money. In fact, there was a gap just the other day. It was DAL. I don't have that example on here. We can look at it when I'm done. DAL. I think it was yesterday. It was either yesterday or the day before. 900,000 shares open and sold out at 9:30 and 60 seconds on the first bar of the day. It opened and did a swoosh, and there was no way that anything made something like that happen other than big money. And that set the tone of the stock on the day, which was red. 900,000 shares got sold out of it in 60 seconds. Boom, that was it. And that's what happens. It's that type of real pressure, which only happens by big money, that creates these gaps. So you have to follow the big guys. I found this picture. It's a great example. I was trying to find a picture of a shark with one of those little fishies. I forget what they're called. They live and swim under these big sharks, and they eat like all their stuff off of here. They follow them everywhere they go. They live underneath them. They just follow them, and they eat these little tiny fishes. You have to follow the big guys. This is it. You have to follow the big sharks, the big money people. You go with them. You just flow with them, and you're fine. You're totally protected. You're fed all the time, just like these little fishy amoebas that feed off of these big sharks and all their stuff. They're fed and fat and happy everywhere they go. They just stick with this guy. And that's what you have to do as a trader. As one individual trader, you're never going to be as big as this guy. That's why you can't trade against the big money. You have to be with it, all right? Be on the side of this. Follow the big guys, and you'll be fine. And thank goodness for these big guys, because where else would we have the opportunity to even make the kind of money you can make as a day trader, as an individual, if you didn't have big guys like this big shark pushing the money in one direction? If you didn't have someone like this out there ahead of you, what could you do? You would never be able to have the amount of profits that's possible in gaps if you didn't have these people. So as much as traders like to complain when they feel like, the larger money is against them in the market or whatever stock they're trading, the fact is they're just trading incorrectly, because they're not trading on the side of it. If you're on the side of it, it's an easy breezy thing. This fish under here that's eating off of this guy doesn't even have to look for its own food, and he doesn't even have to barely swim. He just sticks onto the side of him, and that's it. Go, take me where I need to go. That's all he does. So, some days you get up and you look at stuff in the market, you say, everything looks fantastic. I love these colors. I love every stock. I love every gap. Everything looks great. Oh, I love everything. What should I do? Well, the reality is that most of the time there's nothing to do. All right. The way to make really good money is to find one strategy and get good at it. I've been saying that for years, long before I even started to teach. I was saying that to myself. I was saying that to my friends. You've got to get good at one thing. Why? Because most of the time there's nothing to do. However, if you can learn when there is something to do, then it's very special. Can everyone hear me? Doug said the sound. Can everybody hear me? Hold on, I'm going to reset it. Can you guys hear me now? Can everyone hear me? Can you hear me? All right, there, I reset it. All right, I don't know what happened. Was I lost for a while there? Was I talking to myself? Not that I never do that, but. All right. All right, what I was saying was that most of the time there's nothing to do in any given chart on any stock unless the stock actually gaps, okay? So that's the point I'm trying to make. And hopefully you didn't miss too much of what I was saying. I think I was talking a lot about the shark. All right, good. So one good gap can provide all the sustenance you need. One good gap. One good gap, and we're going to show this example tonight. It's a very good example. And let me know if a period of time goes by you can't hear me, because I am talking fluently here. So hopefully the sound will continue good. There's a certain peace that comes with one focus. when you get up in the morning and you're focused looking for one thing, trading is less stressful. And that is really important because there is some element of stress involved with trading no matter what you do, no matter how many years you've trading it, because you're risking money. The difference is the better you get, the more conviction and confidence you have with yourself, it really becomes a lot less stressful. And as a new trader, you can have less stress right out of the gate if you've got focus. So there is some element of peace and low stress involved with the focus. And that will help you to build yourself up to take the risk you need to take to make the money that's possible in the market. And it's about keeping yourself centered and calm. In fact, it's amazing. Recently, I have felt so, just even in the last week, in the month of April, I have felt so incredibly focused. Even the plays that I'm making, it's almost like I can do no wrong. Honestly, it's just I'm at such a high level of focus, and right now that it's just everything's flowing like naturally, and the market's giving me the stuff too. So when the market gives it to you and you're focused, it's easy. So if peace of mind and profit comes with one focus, then GAPS is the choice. Professional traders all have one strategy they do extremely well. This is a fact, and that is usually how they earn their living. Fact. Becoming prosperous through the market takes a certain drive and skill set that is not all over the place. It's not, woo, I'm here, I'm doing this, I'm doing that, I'm doing this, I'm doing that, I don't know, here, what should I do? Professionals are focused. They're not all over the place. They're not running around like crazy people, okay, jumping from chart to chart to chart to strategy to gap to breakout play to a million things. They're not. How can you get good at many things if you're not good at one thing? It's very difficult, okay? You can't get good at one thing, all right, first. Then if you're good at that one thing, then you can learn another thing. But what I found is that so many people don't even want to get good at one thing. They get frustrated, they get exhausted, they get tired, they get confused, they get impatient. And then they want to skip and go to something else. Meanwhile, they almost had it. They almost had it. They were right there. And they left it and went to something else and then started something else brand new all over again. And they get frustrated with that. And they jump and jump and jump. And it's jumpy game. It's like a Johnny jump. You have to focus on one thing to get good at it. Focus is key. And if you have to pick one financial medium to trade or one strategy to trade, then the choice is easy. It's GAPS. And I'm going to explain why tonight. So the point I'm trying to make here is that focus is the way to trade as a professional. And every professional trades like that. They don't jump all around. They're one thing they're really good at. They may do other things, but they're really good at least one. And you've got to get that down. Get that down first. Once you have that down, you're good to go. Okay? Then you know you can make money doing this thing. If you want to learn something else, fine. People always say to me, well, why don't you do this? Why don't you do that? I said, I don't need to. Okay? I just don't need to. Why? Maybe if I wanted to, I could. Could I get really good at something else? Sure. Do I need to? Do I want to? No, not really. You know, maybe I will later, but I don't need to. Why? The market gives me plenty of good gaps. You know, plenty. So one golden gap can provide all the profit you need. And we're going to go over the example that I'm going to use here soon. Well, there's one choice on the menu for you. Call it the menu of your trading life. And that's golden gaps. So the golden gap. This is a strategy that I teach. And I made up the name myself. And the reason I called it the golden gap was because I feel like when I see these gaps and find them, it's like finding gold. Why? Because they have such a high success rate. I rate the gap based on a rating system that I created. And when they rate over 20 points, I play them. Although I will be honest with you, sometimes something doesn't even rate 20 points. And if I watch it and get a perfect entry, I can make something out of nothing. Because I'm very good with my plays and entries, and that's something else I teach in the class too. But that takes real skill. Here's the chart we're going to talk about tonight. This is FTX. I'm going to go over every single day that you could have made money in this. And do you know that I did this just this week? Do you know that this played out today? This dropped again today. You could have actually shorted this again today and made money in this again today. Today. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. Today was the 11th day. I'm going to show you 6 examples out of 10 days you could have made money in this. And do you know there could have been 7 out of 11 if I had time to add this today for the one that's set up today. You could do nothing but just find one great gap, play it on the day and follow it through and play it every time it sets up. Now there would be days in between, like there were in here, where you wouldn't short it. So you would watch it, and if it doesn't set up, you don't do it. And if it sets up, you do it. You could just do this. You could play the day of the gap, play the golden gap the day, and you could play it on every day through the continuation gap. And the target on this actually for the swing trade is down here. It's 93.50. So this isn't even there yet, and it went again today. Didn't get down here, but it's going to see that number. And I said that the day of this gap, by the way. There was a chance, because this thing can move and rock and roll, that this could have gone to 93.50 the day of the gap. But that was a dream target that day. In 2 days, though, it went almost there. It went down to 95, which is pretty darn good. And then it really wasn't going to go anywhere after that. And I said that in the video. I said that in the room. I've been saying that all along. And I decided to do this whole thing tonight because me, myself, I tend to like to want to trade new gaps on the day. But honestly, I could just do these. I could find one goodie like this one, which I knew in the day that it was, and just watch the thing for however long until I know that the move on this is done. And the move on this isn't done yet, actually. It's just not even done yet. But I'm going to show you tonight, if you played every trade in this, every day trade in this, and this doesn't even include swing trades or core trading in it, what money you could have made in it. Just to show the strength and quality of this strategy alone and why you only need one thing. And you could do it every single day, a new one, whatever the symbol would be, or you could just continue these continuation gaps. And specifically this can be played, it could have been played as a swing trade the day of the gap. You could have just taken it there, day traded, and kept some to hold it down to this target, which it still hasn't gotten to yet. And you never suffered in this. The entry I called in this the day of the gap hasn't even seen this number and won't for a long time, actually. This is a damaging gap. On the bigger picture, the core trade, I haven't looked at it and won't on this chart. We can later, but it's beyond here. I can say that. So here was the first day. The first day provides the biggest move, typically. Unless for some reason it is tough going. It struggles the first day. You've seen that happen. I put them on YouTube. They're out there. The days that they fail on the day or struggle. And many, many times, what do? They go the next day. They flip right on top of themselves the next day. I can name 100 examples of those that have happened in the last year. The gaps are still real, though, and intact because of the money situation. The money situation, what I was discussing earlier, the large money. What happened here on the 20th? This is the 20th of March. This has been going up for a while. This is a beautiful bullish chart all the way up until here. Okay? There was nothing that there was any problem in this, not even with this. All right? Now, here was a clue here that this might have been getting toppy, but, not 100%. Then this was the real clue. If you had seen this and you were in this long, you didn't get out the day that this retested here, couldn't go higher and did a big topping tail, you should have taken something off that day if you were in this the core long. But fine, some people didn't. They said, this is going to 125, 150 in a bullish market with the SPY running up, we're holding it. Then it does this and you're all happy. You say, okay, fine, I knew it. I'm staying in it. I'm staying long. Then it does this and you still don't fret about it. Why? It's holding on the 20. Everything's fine. But then, look, this happened here. The earnings came out and it gapped down. So I just want to go over one more point. I've taught this many, 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 many times, and I just keep repeating it over and over because people don't understand that this actually gapped down to what was support the day of the gap, and people think that it's a buy, but there was no way this was ever a buy. I rated this gap. It was a short. And it was a very high rated gap. I forget the rating. I'd have to go back and look at it actually. But it was good. So I decided to short it. But some people thought it was a buy because it came into this support area here and here. And it is coming into support, but it's not support anymore now. It's resistance. And it's a new gap. And what happened here today, big money wanted to sell out of the gap. All the big money that was running this up, okay, the power in this position was long. They had to get out here. Now, some people got out here with money, so they weren't down. They gave back some of the profit from being up here. Now, this gap down around 102 something, so they lost $7. And if they had a lot of it, that's a problem. All right, they're not very happy this morning. But they're not going to give it all back. So the prudent thing to do is to sell out of the long position that they have. So selling creates this. The sellers are the people that own the stock all the way up. They're still up money if they've been in this back here. So they have to get out with the profits. They've given some back though, and probably too much. What happens here after this bar closes, and this shows the proof in the pudding, which I would have known as soon as it opened in the morning because I know the gap's good and it's real. But if some people don't know how to trade gaps, they would get up the next day and wait till it starts to go and say, wait a minute, it broke the low of yesterday. I think this is real now. I better get out. And then they're getting out, you know, $5, $6 worse than they could have if they had gotten out the first day. And then this thing starts to sell into itself and creates the other big, huge bar that happens the second day. And then some of these people probably maybe didn't get out with any money at all, okay? They may have gotten out with a loss. Why? Because you could tell that there was buying that happened right in here in this pivot. You can tell there's buying that happened right in here. Look at a huge big green bar. So this position people, the longs here and the longs here actually lost. They actually lost. These people were down and these people were down. And these people that bought this bullish gap, which some people buy, set up as a buy setup, gapped into a buy setup, ran up. You didn't know this was going to happen when this happened here. There's nothing wrong with the chart. You could have bought it. This is extended to buy, but you could have. And if you did, you lost here. So this is a combination of a lot of different things. People that were up money, that were down from the gap from the night before. So they were down $7 on the profit. They had to get out. They're still up money though. Then it's also people that are actually really down money. These people here that bought, you can tell where these people bought here, and these people that bought here into this rally, they're down. They're underwater. They got to get out quickly. Then these people are the last of the Mohicans that are really down unless they bought way up back here. Because if these people waited to get out the second day, they're crushed. The point I'm trying to make is you can see that nothing would make a bar in FDX that would run from 102.5 down to 95 unless it was big institutional money. And that's the kind of thing that buys these things. This was a great investment for a while. This was a huge, beautiful, uptrending stock. Fabulous, beautiful. So, you know, institutional money makes money in these longs, and then they got to get out of it when it gaps. And then selling out pushes it down. And they're pushing it down as we short it, and that's the play. So the day of the actual gap, I'm showing a 5-minute chart because I think it's easier to see here the nice full move on the day in one picture. This was the 20th, but the trade I called was actually the 1 minute. And it was the break of 102, which was right up in here. So the entry time on this trade was 9.40. The price was 102 and the stop was over 102.30. So 30 cents, I'm using an example, if you took 1,500 shares and risked $450, and if you can't risk that much, just divide it in half, all right? The first target was $100. The real target was 99. Dream target was 93, remember. We'll go look at it. But once it got underway, I even knew it was going to go to 99. I even said maybe 98 in the day. It actually did go under 99. We'll go back and look at it. But, you know, after it gets down to 99, you got to get out of it. If you're even still in it by then, you know, you could have taken it all off at 100. The total risk to reward, if you stayed in this to the target on this first day of the gap, was 10 times the amount you risked. Whether you risked $450 or $150, it was 10 times the amount of the risk, which was $4,500 from the entry. So this went way past this, okay, into the second day. But this is the 20th here. Okay, this is the day of the gap. This is the entry up here at 102. And it actually never got anywhere near where the stop was. Never got anywhere near it. You got in it. Look, beautiful. This is an 8-period moving average, the black. The 20 is the blue. And it squished and just fell and fell and fell all day into the number. And that's why I was saying you knew it was going to go past the 100 number, because it did into this first drop. It just got under it. It's not like it halted and bounced at 100. Also remember, you're looking at this chart. Why would this thing even stop? It just ran out of day, and it didn't even stop the next day. And then it finally stopped. But this thing, like I said, had the potential to go all the way huge in the day, because it's getting crushed. And then the panic selling starts to come in. And then the panic selling continues the second day. So the first day of this is the best time to get entries, the first day of the gap. And many times will provide more than 10 times the amount of profit. But in this case, you know, it had a bigger stop because it's FDX, and this was it. So you could have made $4,500 first day risking $450, or divide it by 2 or a third or whatever you want to do. The point is it was a good play, that there was money to be made with good risk to reward. The second day, beautiful play again. You watch it. What does it do? It boops up here, it opens right under the low, so you know it's going to go. It boops up here, right? It tries to go, it can't, and it falls off a cliff right there. We'll look at it. This is the second day. So you're watching it the second day. You're like, I think this could go to 93 today. Okay, fine. You watch it. Here's the first bar on the 5. It goes up. It can't go anywhere. It immediately crashes down. And then it sets up right in here. Right in here, there's a play that bled all day as well. The entry time was 9:45. Price was 98.24. The stop was over 46. This was a 22-cent risk. If you took 2,000 shares and risked $440, the target was 96. You made over 10 times the amount risked this day. 44.80. Whatever you risked, you made over 10 times. This is the second day. Second big red bar, which by the way, this also went past the target, but it went 50 cents more. But once this thing drops into here, this is really long to be in a play, all right, for me. And you've got to get out of it. There's no way that you would have held this for 50 more cents when the target's 96 and it starts to back up and bounce. You'd be out here. It did go into the 2 o'clock reversal time and made one last push down 50 cents. And 50 cents is a lot, you know, if you have 2,000 shares, but, you know, you're up a lot of money in here. You're in this through the whole bleed. This actually was so nice. Look at these. Look at how nice this moving average is curving. Like it can't even, this isn't rallying at all. Like obviously no one's buying this. No one's even getting out of the short. Look, you can count the number of green bars here. There's hardly any at all. I don't even think there's 10 in this. Look, let's count them. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, the one you exited on. So from 9:30 to 1:30, for 4 hours, there was 10 green bars in a 5-minute chart. It's just an incredible weakness, huge weakness, all right, which is what you want to play. Whatever you play, whether you're playing strength or weakness, you're playing on the direction correctly, and you must see the confirmation of the direction, which in this case is the strategy, which in this case is the gap, okay? The gap from the day before. This is a continuation gap play. So you would have made over $4,400 in the second day. Now what do? Well, there's nothing to do the third day. It opens and goes green and it rallies and you see it, so you wait. Then you watch it the next day. Rallies, you wait. Next play was actually on the 25th. What do? You say, I think this thing's setting up again. You watch it and you wait. And lo and behold, it sets up again. So you're following the stock now through to try to get it to the whole 93 target, knowing you're going to get multiple days of play in this, which of course you do. You got a lot. And like I said, you could have even gotten today. So what does this do? This sets up once again. 9:50 is the entry time. I'll go back and look at it. Price was 98.34. This is stop now. Here's only 19 cents. The stops are actually getting tinier. On 2,000 shares, you risk $380. The target is 96.75. And it actually went through there again, but this is where you'd get out. And the risk to reward in this is 8.3. 8.3 times the amount of risk, and you made 31.80, risking 380. So let's just go back and look and see. 9.50 was the entry. Here. Right here, you're in it. And you get this whole drop down into here. And here's where I would be getting out, okay? If you had stayed in it, if you had conviction for it to go to 96, which it actually could have, it got within, 10 cents of this. If you hold this all the way down that day, you would have even gotten even more. You would have actually got another 70 cents. I didn't even use this in an example because I would not have stayed in that. I would have been out of this with this kind of money. But you could have actually made even more if you'd stayed into this last drop here. I don't like to be in plays over lunch, all right? But you could have stayed in the trade, put the stop over the pivot, and let it drop almost another dollar, actually. It might have gotten to 96, but 96.75 is what I used for the example for the exit. But even that was 8.3 times the amount. If you'd carried it down all the way through the move, it would have been like 12 times the amount of risk since the entry up here. How did you know this is going to work? Same thing again. Opens up, rallies up, tries to come up, can't, drops in, get the confirmation, you take it. And all of this is happening. Everything that you're doing, every single choice that you're making has to do with the gap, has to do with the original gap play. So let's go back and look at the daily on the 25th. You can just see it. So this is the 20th. This is the 21st. This is the 25th right here. And it actually broke under this bar here, this green bar here on the day. It could have actually broke under this one. I actually thought it was going to do it, but it didn't. I actually thought it could have even gotten to 93 that day. It didn't, but it had another beautiful move. All right. So let's go back. So that was the third day of play. The third day of play in this FDX. Now, the fourth day, another day yet again. This is April 1st. This just set up again on Monday. Rallied hard first, did a big scary topping tail, and yet set up once again. We'll go back and look at the daily chart of it, but here's the intraday play. Here, you enter right in here. Stop over here, you're in, you get the drop. Another play in this thing. Fourth day of play in this. The entry time was $9.55. Price was $99.07. The stop is even smaller now. The stops are getting smaller. It's getting tighter and tighter to even play. 3,000 shares if you risk $390 and exited at $97.67. You would have made $4,200. Again, over 10 times the amount risked. Almost every single day this played out, you could have made 10 times the amount of risk. That's just incredible. Most people are playing stuff looking for 2 to 3 times the amount of play. I don't trade like that, but most people do. I like to make 4 or 5 on the worst end, but I'm usually looking for 8 to 10 in the plays that I do to go to the targets. I really think that's how you can make money as a trader. If you can stand holding it to then. Let's go back and look at this. So here you would have been out again into the bounce. Here is the entry. You take it down. Shoo. There it is. Let's go back and look at the daily chart that day, the first. Okay. Here was the tail it made. You would have had to have conviction in the gap that this wasn't going to have any meaning. Do you see that this actually set up here as a daily buy setup? I would never buy this, okay? It's not a buy. The chart is damaged now. The stock isn't in an uptrend anymore. So you don't buy anything that's not in an uptrend. So there's no reason to buy this. So seeing this wouldn't have made me think anything that this was a buy. All right? This was a rally up to resistance that held and came in on top of itself. How did you know that? Well, you waited for that setup to hold in the trend, which was the play on the lower time frame here. This big push up that holds, can't go higher, drops in hard, half the move that it rallied up, it dropped in, rallied up again, and set up right in here at a reversal time right before 10 o'clock, and then set up even here. You could have even added in a trade here and taken it down. And look at how it moved once again. There was hardly any green in here at all. As soon as it set up again, it fell off a cliff and capitulated. This was the actual daily sell setup triggering to go lower again to get to the full-on target, which is 93. And it's underway now because it's ran down now every day since then. This was Monday, Tuesday, Wednesday, Thursday, 4 days down since this crazy topping tail thing that looks insane on the daily chart. And if you don't know how to read this, it looks insane, but didn't do anything wrong here at all. Just went shoot, oh, up, and down. That's it. All right. And the fifth day of play in this, you could have done this again on the 2nd, which was Tuesday. The entry was late on this one, 2 o'clock. You could have gotten in earlier, I'll show you. But the real nice move at entry was 2, 97.90. Stop over 98.02. The risk was 12 cents. Again, look how the setups are getting tighter and tighter and tighter. On 3,000 shares, the risk was $360. The target was 97. It went past that a little bit, but that's really where you would have gotten out. And the profit in this was $2,700. This was 7.5 times the amount you would have risked. Okay? This did drop again harder, but you would have gotten out in here into this bounce, right in here at the target at 97. If you didn't get out on this bar, you would have got out here. This is the capitulation. Here's where the setup was. You get in here, stop over here, and you're down. You could have actually gotten in this earlier. You could have actually gotten in this here or here. When this rally back up here, though, this was the entry Y, confirming it wasn't going higher at a major reversal time, which is 2 o'clock, confirming the resistance at happening right here. You're in major reversal time, and it drops. And I don't really like to play again around lunch, to enter new plays around lunchtime. But this was the confirmation that it was going lower in the day. And again, you would have known that. Why? Because it triggered on the daily sell setup through this day into the crush that happened with the big topping tail the day before. Okay? So there again, look, 7.5 times the amount of the risk. And number 6, on the third, another play in this. Entry time was 9.50, price was 97.41, stop over 97.56. This is 15 cents risk. On 3,000 shares, it was $450. The target was 96.08, and the profit was almost $4,000 again. 8.9 times the amount you risked. Every single play in this Golden Gap was phenomenal. The days that you played it, and to make this many plays in this thing in such a tight time frame, it's just incredible. It's all in the gap. You can't do this in anything else but a gap. Why? Because most of the times there's nothing to do in any normal trading of any stock. That's what I was discussing earlier. You can only trade stocks really when they gap to get these kind of setups. Otherwise, they look like gobbledygook. I said this is nothing. All right. These kinds of entries exist in beautiful. These kinds of entries exist in beautiful gaps. Okay. So 9.50 was the entry time. It opens, it rallies up, it holds right in here, can't go higher, sets resistance, comes in, holds, you're in. You're in the play, and it drops. And every time it even rallied a little bit, you have 100% conviction that it's going to, 96 was really the target on the day. 96 was the target on the day, and it almost got there. You got to get out into the drop there. Didn't quite get there, but you take it out as soon as close as you can. You're not going to hold something through a bounce to make sense. And you're out. All the profit you could have made in FDX in 6 days, not even including today. I could have done one of these for today and added it. All the profit you could have made in 6 days of one play, each in the last 10 days, is over $23,000. You know, the risk would have been $24.70. That's nothing to sneeze at, okay? But to make $23,000 risking $24.70, that's pretty darn good for day trading. You would have had to sit and watch and play this stock every day it's set up, and you would have had to not play it the days that it didn't set up, which you would have had to know that it wasn't setting up and wasn't going to work, so you'd lay off of it. But you would have known and had conviction that it's going to 93.50, going to 93-ish. You would have continued to watch it and play it at least until it got there, and possibly longer. The total risk to reward ratio overall in this is 9.3. And how is this possible from the gap, or what I call the Golden Gap? This is not possible in anything that you see in any other strategy but this, that you could take the trade the day, the gap, and follow it through in what I call continuation gaps. I could make a class on how to trade these alone. I've just been following these things more and more, and even in doing that, I've got to tell you, it's given me so much conviction in this power of my own rating system that nothing's ever going to take me off of it. I just can't see how I'd ever trade anything but this the rest of my trading career. Honestly, I've just figured out so many different ways I could use my own system. So after the Golden Gap, there were multiple plays that set up properly on this chart with huge profit. They also had a great risk to reward ratio, and all of this is due to the Golden Gap that happened on March 20th, 2013 in FDX. The effect of that gap carried through because the large institutional money had set the tone the day the stock gapped. That is why this is working so well, because selling is still going on in it. And we're going to go back and look at the daily chart again. Learning how to rate the gap to know the stock as a Golden Gap is very important and makes a huge difference in your trading profits and having conviction. Also, this move in FDX is not over and will continue lower. I just want to go back to the chart one more time here on the daily and show you. The reason that this is continuing is because not everybody gets out the day of the first gap. Smart money does or tries. If some people miss it or they don't, they'll wait for some of this green to push it up a little bit back up on top of itself, which does happen sometimes, and they will try to get out there. That's why this crazy move happened here. This spike up the day that this happened and the sell-off hard into it was people then saying that they decided to get out, and they got out better than they would have gotten out here the second day, and if they didn't make it clear out in the first. So the spike happened by a hard sell that was put in, that as soon as the price got back to a number here, whatever the number was, 99, 99.50, they said sell us out of it there instead of getting out back here at 95. All right. So that caused that big spike up that then created it to go hard down on top of itself, and now it's continuing. The 30 cents is where the stop has to be. That's how you're calculating your risk. You're taking the position, and the 30 cents is the risk amount. 30 cents, for example, times 100 shares would be $30 you'd be risking. If you want to risk $30, you take 100 shares. That's where you're putting your stop. The stop has to be at this. I use hard stops when I take a trade, so that if the trade moves against me, it doesn't move against me in some crazy direction. My risk is contained. The risk parameters must be set, and you must adhere to them. Otherwise, you're trading like all over the place, and you don't have any set risk amount, and you're risking indeterminate amount of money, and you can't trade like that. Every trader has to have risk parameters, and I use hard stops. I don't even care if they blow through my stops. I'll retake it. In the morning, they got to set up for me. I've got to have a stop. Like, I'm actually fine with it going through my stop and retaking it. I really find that using stops is important for the risk parameters. Even if it takes me out with a loss and it sets up again, I'll go back in it. Because once the move happens, I'm making money in the move. And you got to know that if it stops you out of the stop, and again, this is what I teach in the class, that it may fail, in which case I'm not going to stick in this thing if it wants to rally $1 against me. That's crazy. I'll take it out. I'll lose the risk. I give myself a couple places of risk a day. If I have a certain amount I'm risking per day, then I divide it up into 4, 5, 6 trades. I don't risk the whole amount in one trade. All right. Jeff is asking me if I add and reduce. I add and reduce in a way that is not typical. That's another whole class I could do altogether. I like to actually add at my trade at a place that that does not ruin the price. I'll be honest with you. I just did that. What did I do that on? The CLF? Yeah, it was a CLF. I actually did this on FDX. Here, this first day, I did an add on FDX at the same price. I doubled my risk. That is not something I would go over right now. It's too much. That's a whole class itself. But I actually add and reduce, meaning I get the confirmation that the trade is absolutely not going to fail. And I will add at the same price or close to it and increase my risk in doing so and double the position and double down. The thing is that when you take an add and you ruin your price, like let's just say you took the 102, it dropped. It rallies back. You add here. If this fails, say I'm just throwing numbers out there. Say you're up $1,000 in here. This rallies back up. Now you're only up 500. You double the position in this. What if this fails? Then you're up 1,000 and you ended up with nothing. I know that people do that. There's a way to do that, but you really, really, really can't err in where you add and put your stop. If you err, you lose. It screws it up. It screws up the whole entire play and the whole trade. There's a better way to do that, which is doubling down on it when you get like a clear sale thing that says, I absolutely am not going to fail at all in the day. And this is actually something that I actually can make a whole class on, a real class that I could teach to people and charge them for. That's too much to talk about today. But I don't add and reduce the normal way. Why? Because if you do it and it screws it up the whole trade. You got to be really particular with it. It's not easy, okay? And I actually have found a better way to do it. Getting it closer to the price so that I don't screw up my price. When I take these trades, my price is so good, there's nobody that's getting a better price than me. And if I find a way to kill that price, it's really difficult for me. If I don't do this, what I would do is lower the stop so I can keep the profit I was still in it here. I wouldn't add in here probably. I got to be honest with you, I don't really trade like that. I add when I get when I get the thing. If I can add in the first 15 minutes, the first 30 minutes, I'm adding. The longer it goes, I'm not adding. I let the trade play out, or I'm out of it. Or I take half off and let the rest ride down. I know it sounds great to do that. I've learned how to do it and I know exactly what you mean. I probably learned from the same person as you. I know, all right? But the reality is that sucks, because if you put it at the wrong place, you end up with nothing. I've done it so many times when I first learned from the places. It sounds great. It sounds fantastic. Like you can't lose then, but you can lose, because if the stop isn't at the right place, if it does a spike up or a topping tail or a little wiggly jiggly or anything that goes and flips and then goes around, you give back and you end up with nothing. And that's horrific. It's horrific. I'd rather get in with the confirmation that it absolutely isn't going to fail. And there is a way to do that. But this sounds great. You can do it if you want to. If you don't have the stop at the right place, you're a goner. And you've lost $1,000 or $500 and you end up with nothing. And then you hate yourself. I can't do that to myself. I've done that. I played around with that. I played around with it and played around with it and played around with it. I don't do it. It's just insane. Once in a blue moon, I'll do it. You know when? When something's a bleeder. When it is such a bleeder that I can put the stop so high up and not even worry about it, because it's just going to bleed. It's just going to bleed and bleed and bleed and bleed and bleed and bleed and bleed. And it's not really going to rally much. I'm trying to think of anything like that, but I don't know. Yeah, it is a free trade if it works, meaning you didn't risk anything. But you also won't make anything if it doesn't work. That's the risk. The risk is you have money and the potential is you're going to end up with nothing. The 3-bar rally is real. The setup is real. Lowering the pivot is real. In this case, it rallied up right to the resistance. It was beautiful, actually. You could have done it here. But the risk in doing that is that you end up with nothing. If you're okay with that, do it. But you could end up with nothing. That's the problem. I think you can do it on stuff that's extra specialty good. I think you can do it on bleeders. I think you can do it on extra specialty good things. Do I do it all the time? No. If I get a confirmation that something absolutely isn't going to fail, then I'll just take double the risk. Because I give myself a couple trades a day. I'm just taking basically 2 trades in one. You got to learn how to do that though. All right. Whereas with this thing, there's no risk. Jeff's saying, you know what, this is a free trade. If I take this trade and I'm up money and it rallies back, I'm still up money. If I double the position here and lower the stop, I'm adding, reducing, I'm taking it down, I'm making more. And yes, you can do that. You got to have it right though. You really have to have it right. There's no screwing it up here. Yeah, it's lost profit, I guess. And I found by playing around with this time and time again, that the way I tend to do this now, I like more than this jiggy, because too many times these don't actually hold. It's like so particular. It's like once in a blue moon that they actually end up playing out where they don't ever go over where you want to put them going down. The tightness in the morning is so good. As the day goes on, things get choppier, even after 10 o'clock. And you see that this is like 10:15 and 10:30. Now this thing never went back up here. Okay, it never did. Actually, every pivot in this was pretty. Every pivot in this was beautiful. You could have actually added and reduced the whole down way down in this. The gap was so good you could have done that. All right. However, I really wouldn't do it any other day other than the day of the first gap. I wouldn't do that on days after the fact, because the cleanest entries will be the first day of the gap. Yeah, and don't hold through lunch. Exactly. Or just, monitor it down is what I would do. All right, let's go back to what I was saying at the end here. The point I'm trying to make is that you can make a living doing not even just one strategy, but even that one strategy in one good gap. Just sitting and watching it. Of course, you have to know how to play it. And that means you have to know how to read charts and know what to do. And it's still lower. It's still lower. The reason that it's still lower is because all of the people have not sold out of it yet. And eventually what happens is large institutional money that just sold out of the gap, that just sold out of this gap, they were long, will short it at some point. Now, I don't know when, but some of that could be happening now too. All right, some of that could have happened in the topping tail that happened the other day too, because they can short too. And they can read gaps as well. The big first day of the gap happens with hard selling. But then as these keep going, the shorting comes in with the big money on the short side too. That's what's happening in Apple. I did a video on this. It's on YouTube. I don't want to spend a lot of time on this now. But the reality is that is what is happening in Apple. And what is going to push this down even harder now. Because smart money is going to short this even more here. All right? And that will push it down. The sell-off that happened in here was people that were long in institutional money that sold out of profits and created the push. This gap here, there was some selling too. There's going to be some shorting that comes into this thing here now. This is lower, absolutely. How do I know it? This gap rates extremely well. This isn't the first one, so it wiggled and jiggled over it. This was the first one. Here's a good example, actually, where it didn't go right the first day of the gap, but it was the first one, and it was a good one. But it didn't play out perfectly on the day. But then the second day, it went full throttle and dropped off a cliff into here. Just completely went. Once again, you must have conviction in your gap and what you're doing. If you took this as a swing trade, how would you know not to get out in this green bar here and panic? Why? Because of the gap. And you would have known the target, the first target actually was down here, so you would have stayed in it through. And look what happened the second day. It collapsed right on top of itself after their green bar immediately. And they pushed it down again. And it went way past the target here. It just dropped off a cliff. No suffering. So Apple is lower, and Apple's a golden gap. It's another beautiful example. And this, how do I know it's lower from this guy right here? That just happened. And rates very well, which is going to create a whole nother move down that's happening. And that may set up at some point in FTX, okay, where then the big money starts to short. So the big money is selling into here and sold out here. And then the pressure is going to come in where the shorting starts too, which is why I think Apple has a really big target on the downside still. All right. And is not a buy, and you can't be buying these things. This is another beautiful example of what? The power of the direction of the gap, which is large institutional money that's selling out of this and creating it now to be a whole different trend. Apple was an uptrend for a long time. FTX was an uptrend for a long time. When the gap happens, the direction changes. Hello, we're going to change you right now. Okay. And Apple has no control. The big money says we're off to the races. And they're selling out of it, and they're changing the trend. And this is all happening with large money. And look how much money you can make if you're trading on the right side. Gobs and gobs and gobbledygooks. Tons and tons of it if you know what to do. And if you don't, you're picking bottoms, desperately trying to make money into something that you think is going to make you $1 million when it rallies back over 700, but you're in the wrong direction. And you can't ever play in the wrong direction with this kind of money. Do you want to go up against a shark? Or do you want to travel with that shark? Travel freely, travel with less stress. Be protected all the time because you're always got it on your side. Or do you want to go up against it? It's dangerous, so you can't do it. And you've got to have conviction. And this is an essential element in the Stock Swoosh LLC educational program that I teach. It is my personal belief system that you cannot trade well in the market without having conviction. You need conviction in everything, and most importantly, yourself. And how are you going to get that? Well, you're going to start to trade well and make money and practice and learn it. And that's going to help you believe in yourself. If you do not know what it even feels like to even have conviction in your strategy or your play, then this is the first place to start. And if you do not know what conviction is, then let me describe it to you. Conviction is I am going after it and I am not going to fail. You've got to get conviction in order to make money. If you question yourself, maybe I'm going to go after this and make money. Maybe this line is saying, maybe I'm going to go after that zebra and maybe I'm going to kill it. Maybe I'll get to have supper tonight or maybe I won't. Do you think he says maybe when he charges head first to go get that zebra for his supper and for his family? He doesn't say maybe. He's putting himself at death's door, going to be trampled by a herd. It's not maybe. Okay, it's I have 100% conviction I'm going to kill that zebra tonight and take it home to feed myself and my family so they don't die. Okay, and I'm putting myself in harm's way to do that. I've got a plan of action and I have conviction. I've done this before and I'm going to do it again. I know how to do it. So you say to yourself, I know how to trade and I have 100% conviction that I'm going to trade FDX as a golden gap because I've rated this gap. It rates high. I know where to get in it. I'm doing it. I have 100% conviction and I'm going after it to make the money, and you have to want it. This may be this and maybe that doesn't get you anywhere in the market. It gets you losses. And trading scared gets you losses. It's a terrible place to be with yourself, so don't do it. And if you're scared, it's because you don't know how to trade, and therefore you need to learn how. Scared money is lost money. And there's too much of that going on in the market. So I'm trying to teach people how to have conviction in order to trade well. And this is a learned process, and it takes time, and you've got to feel it, and you've got to know it. And it's not something that's going to happen overnight if you don't know what I'm talking about. However, it is a learned skill. It is something that you can learn, and you will get better with it over time. Every day I'm getting more conviction in what I'm doing. Do you think teaching isn't giving me more conviction in what I'm doing myself? Do you think my own personal trading isn't improving to newer and higher levels because I'm teaching? It is. It is. Just like going back and doing the example I did today, I'm like, seriously, can you believe that? If I played FDX like that in the last 2 weeks, it would have made $23,000. Are you kidding me? It really. So you can never have too much conviction. You can never make too much money. You can have too much fear and anxiety and stress. And that comes from not knowing what the heck to do. So just learn what to do. It's very simple. And the Golden Gap rating system that I teach, to me, equals conviction. And one of the reasons I invented the Golden Gap rating system is that I needed a strategy myself, personally, that gave me conviction to risk my own money in the market. I wanted a system that was so precise and that it worked more often than it failed. I made a lot of money when it worked, and that is the best way that I can describe the Golden Gap system that I teach. And I have accomplished what I set out to do personally, which was design a rating system that was so strong that I felt 100% conviction in playing gaps, taking size in my plays, and taking aggressive entries early in the morning, which is the best place to get them because you're getting the best price and you're getting it at the top of the move, the top. So the Golden Gap course teaches a point rating system for you to choose which stock to play each day. And the 26 points in the course are all based on the daily chart of a stock. The points use math and science in conjunction with technical analysis, very important, obviously that's how I trade, to analyze the price patterns, to choose which stock symbol and gap to trade on the day. The Golden Gap is a very, very detailed system, and I created it in the way to find where the money direction is going for the large money. That was the whole point of it. So the Golden Gap course was designed to learn how to trade gaps, to learn a strategy that offers momentum stocks, moves on the day, to learn a consistent and profitable strategy, and to learn how to pick which symbol to trade on the day. To learn how to enter the stock and figure out the targets. Very important, just like FDX. It's going to $93.50, $93. So if you really want to become a professional, it's about learning how to get good at one thing and becoming a master at that thing. So what are you waiting for? This going all over the place, I'm going to try this, I'm going to try that. It's not going to get you where you want to be. Investing in what I call value-added education is important. And you've got to consider the value we'll receive investing in your own education. We were talking about this just the other day this week in the room. It's a wiser choice than throwing money into the market without knowing how to trade properly, which is taking a class. For some reason, people think that it's easier to just lose money in the market over a slow, long period of time rather than fronting the money for a class up front. But in the end, you will make more doing that as long as you take a good class and learn from someone that knows how to trade, which is me. If you truly want to be a professional trader, either full or part-time, then the investment you make in a class is well worth it, because the market will take far more from you than the cost of any class. Even if you go to some high-priced place or some class where they charge a crazy amount of money, okay, you'll still end up better paying for that than losing it in the market over 2, 3, 4 years of trading. It'll just be a slow bleed. And it will be painful. There's so much more pain when the agony continues rather than just fronting the money for a class, learning it, and moving forward and starting to make money. And that may take you still time to learn the information. How much time? I don't know. I don't know how long it's going to take you to pick it up. However much time you want to invest in actually taking the time to learn it, studying your charts, studying the class materials, and the information. An all-inclusive class that teaches the complete system for a strategy and the plays that work with them is going to pay off for you in the long run, because once you learn it, you will be able to pick up the pace and make money faster rather than the slow bleed. The slow bleed makes people feel like they're giving themselves a chance to profit with the market, but the market will never let them profit if they don't know what to do. And it results in pain over time, which is actually worse for your psyche than upfronting the money for a class immediately. Just getting it over with, learning how to do, practicing on a demo, practicing with small size, and then stepping it up once you know what to do in a couple of months. It is so much more better for your psyche to do that, because you're not really losing. You paid for a service and you got the information in the class. Losing in the market is painful. And the longer it goes on for you, the more damage you're going to do to your psyche that you're going to have to heal yourself to work through it. Trust me, I know. I've talked to people and I've been through it myself. How I got through the other side is sheer will and determination. And I said I wasn't going to quit. There was no option for me to fail. I never gave it to myself. And that's another thing I want to add tonight too. If you give yourself the option to quit, you'll probably fail. Don't give yourself the option. I'm going to learn how to trade and make money in the market. I want to make a lot of money trading. That's it. I'm doing it. Boom. If you give yourself the option to fail, you will take it. Okay? Don't give yourself the option to fail. Don't even put it out there. All right? Failure is not an option. That's part of the thing. Thanks, Doug. Have a good night. That's part of the thing that this golden gate, this door open to the market. Say, here's the doors. I'm opening up the doors. The market says, come on in with all the rich people. You're allowed now, Melissa. How do you get them to open that door for you? You got to knock really loud. You got to knock with all you've got. And part of doing that is you're not going to give up. You're going to keep knocking. Okay? When you quit knocking, do you think they're going to open up the door? No. Part of getting past the door is failure is not an option. Okay? Too many people give themselves an out. And part of that out is bleeding money over small amounts, losing $100 here, $50 here, $200 here, $500 here, $1,000 here. They're doing this, they're doing that, their life's going on. All of a sudden they wake up one day, they spend 3 years trying to learn how to trade. They still are not making money or paying their bills, and they got to go back to their real job that they didn't want to go back to full time in the first place, because they spent all this time and they never made it. They had 3 years of the life they gave themselves to learn how to do it. And they couldn't figure it out because they didn't want to pay for a class or go learn from someone or invest in it and say, I'm all in. I'm all in. The one reason that I figured this out so good was because I was all in. I was all in. Okay. I never gave up. There was never an option for me. And on top of that, I was all in with everything I had. And I'm not lying. Okay. So that's why the stuff I have is good. I mean, that is why the stuff that I'm teaching, the stuff that I'm doing, the stuff that I know is so darn good. But I wouldn't do that to yourself. I wouldn't tell you to go out and take on the market like I did. It is really rough. But I do want people to consider learning what to do before throwing their money into the market. Okay? Because it's painful on your psyche when you lose against the market if you don't know how to trade right. So the best thing you can do for your own personal well-being is to learn. That's the best thing you can do. Start making money trading. Learn the proper ways to do the things. Learn how to trade golden gaps like FDX. Learn what you've got to do. So the class I'm doing, if anyone's interested, I have a class. It's not this weekend. It's the next weekend. It's April 13th and 14th. It's 9 a.m. to 5 p.m. If you're interested in the cost, it's $19.99. You can contact me at melissa@thestockswoosh.com for more information. In this class, I will teach how to find these gaps and also play them as well. And I'm offering a special for, oops, it's not for March, it's for April. It's for the month of April. Gosh, I don't even know what month it is. The special is the Wealth Manifestation class I'm giving for free with the class on the 13th and 14th. And the class for the Wealth Manifestation is April 18th. And the time of this is from 1 to 4. So this class is normally $350. I'm offering it for free with the April Gap class, which is April 13th and 14th. And the Wealth Manifestation class is April 18th. This is April, not March. So does anyone have any questions about anything? Let me know. All class participants will receive 1 month free in the StockSwoosh trading room. It's a fantastic idea. If you're interested and want to just do the wealth class, you're going to get 1 month free in the trading room. That's $350. If you want to do the Golden Gap class, then that is $19.99, and you're going to get the wealth class for free. And you could be in the StockSwoosh trading room with me trading. Live trading calls if you want to do this. Contact me for more information. Thank you, everyone, for coming. Does anyone have any questions? Anyone have any questions at all? And earnings season is in two weeks, less than 2 weeks, a week and a half. A week and a half from here is earnings season. Does anybody have any questions on anything I talked about tonight? Anything about the class, anything about FTX, anything about gaps, anything at all about what I was saying about being on the side of the money and the daily chart direction, anything at all? Went a little bit over here, that's okay. Talked for a little bit more than an hour, but I think it was a good example, a good example. Thanks, mediator. I think it was a good example of how the strength of how you can play these things in so many different ways. Play them the day of the gap, play them all the way down. Jeff has a question. Jeff is saying, do I teach specific management strategies? I teach the entries and the exits. Are you talking about money management? I teach how to find the targets with the exits. I teach specific exits for the reversals, where to get out, teaching you how to read the bars, the candlesticks where it's going to reverse. Is that what you mean? Yes. Chart management. Yes. We talk about money management. The chart management I do teach. That's part of the exits in the second day of the class. The first day of the class is on the 26 points. That's the whole day. It takes up the whole day. That's Saturday. Sunday, I teach all of the entries and all of the exits, which is based on the chart. Everything I do is based on the chart for the entries and the exits and the targets, all of the above. And we do talk about money management, but I think that's up to you how you want to actually play. But I do discuss that on the second day. No, the amount has to do with buying power, mediator. Meaning, if you have to have a certain amount of buying power in order to get, for example, 1,000 shares of FDX at, just for example, say $98, you would have needed $98,000 worth of buying power. If you have a day trading account at a retail firm or a prop firm, it depends how much your buying power is, but it could be in a retail place, it would be 4-to-1. At a proprietary day trading place, it could be as much as 10-to-1. So you don't need the exact equivalent of the amount of the money. You need to have the buying power for that, though. But you do get leverage in a trading account. We can discuss that more later. You can email me. I am not all or none until the final target. I personally, the exits that I teach in my class, I use. And the exits are based on reversal signs. And when I see that, I'm out of either half the trade or the whole thing, even if it doesn't get to the target. If it does a reversal sign that I teach in the class, one of the exits. The targets are there if you want to stay in a portion of the trade to the target, or sometimes actually they go to the whole target. Okay, sometimes they just go to the whole target and you just manage it down. But I teach specific exit, I call them reversal signs. It's based on the candlestick patterns when I see it's going to reverse. Yeah. So I am not a full-on believer in taking every single trade all or nothing. I think that in the end, the idea of how to trade well is to book the money. And if I see what I know and teach in the class as a reversal sign, I am not holding it through and suffering through a rally, through a reversal sign. If I'm not at the target, I'm not holding the whole trade through that. The idea of trading is to make money. And things do not always go to the target. What if I had stayed in FTX until the target? Well, actually, that bled into the bottom of that, bled into the end of the day. That actually bled all day long. But not everything always gets to the full-on target on the day. Lots of times they do, but sometimes they don't. And so what are you going to do? Let's just say you're up in a trade, $2,000, and it's not at the target. Let's say it's, 80 cents away from the target, $1. You could make an extra $1,000 if you stay in it to the target. You don't know if it's going to get there. You get one of the reversal signs that I teach in the class. You get it. Are you going to stay in that trade and give back possibly $1,000 to make $1,000? The answer is no, I wouldn't do that, and I don't think any prudent person would. You know what you do? You book it into the reversal sign, you book the whole thing, you're up that kind of money, and if it sets up again, you take another trade. You can take second, third, fourth trades in these things. The GPN I did yesterday, I called several trades in it. I even called a late trade in that because I saw it setting up again. There were several trades in that. You get out, it resets up, you take another trade. That's the other reason I don't play all or nothing. Well, it's both, Jeff. Jeff is saying he makes money with specific management skills. You have to do both. Rather than picking stocks, you got to do both. If you don't pick the right stock to play, and you don't get the direction right, and you don't get the entry right, you can't make money. You have to have it all. If you have good money management skills and you have a good strategy to pick the right stock, you're going to go to town, all right? But you've got to pick the right stock to play. You've got to get the right entry. Personally, if you get the right entry, you can't not make money, okay? That's the second part of the day of the class. I teach these entries that are so specific. You get the entry right on something, you take a good trade on a good stock pick and you get the entry right, you can't lose, okay? You're at money as soon as it triggers. You never suffer. You're up immediately. As soon as the trade triggers, you're up. Okay, like in this FTX trade, as soon as that 102 hit, that first day that this went, boom, you're up, it ran, there's no suffering. It never went anywhere. You're up immediately as soon as you take the trade. The money management, you can work out yourself, and we do discuss it, is whether or not you're going to take half the trade off through a reversal sign that I teach, or hold the longer thing back down to the target. It has to do with where the target is when the reversal happens too. If you're 10 cents away from the target, you're not going to hold it through a rally to make 10 cents, okay? But again, it goes back to the same thing. What time of day is it? What's going on? If the stock's reversing, you know, and it's 12 o'clock, you could give back 50% or more of the trade into a lunchtime rally, waiting for it to go to a full-on target in the afternoon. That doesn't make sense. You take the whole thing off, you book it before the lunch period, and if you want to trade the afternoon, you wait till it sets up in the afternoon. And I do teach an afternoon play, actually, in the class. I think it's better to maneuver yourself that way in trades than to hold all or nothing. Can you make money doing that? Sure. Will you make more money, you know, booking money consistently and taking maybe 2 trades or 3 trades in a stock? I think you might. You know, it depends how much you're taking on the first trade. That first trade is always my best price. Like I get an excellent price in that. You could just carry some of that through into the close, but you would be taking money out into each reversal sign dip. You could book 25%, 30%, half of it, let the rest ride down, put the stop over. If it sets up again, add there. There you can do your add and reduce, but it has to be at the right point, and it can't be over lunch, and it's got to be probably on a 15-minute chart. Yeah, it's all trading style. It does have to do with trading style, but in the end, you still have to pick the right stock to play. You have to pick the right stock to play, you have to get the direction right in the daily chart, and you have to have the entry right. If you can do that, the money management, you can design with your own personality, and everyone's personality is different. Some people are patient, they can wait for a target. Some people are not patient, they cannot wait for a target. Some people can't be up, you know, several $1,000s and suffer through giving back 500. It's too much for them. They can't do it. You have to decide what your personality can withstand. And this is where the money management has to do a little bit about what is your own comfort level with the risk and the profits. And that has to do with each individual. But I can help people through that. But I teach specific entries. I teach targets. I teach exits and through reversal signs. And the management of that is to take some off when you see the reversal sign. You've got to do that. Otherwise, you're letting the whole trade and all the profit move against you. You know, that as a day trader, part of the benefit of being a day trader is we can be nimble. We can be nimble. We are not a hedge fund. We don't have 250,000 share lot positions where we can't press a button and get out, you know, all at one price. You know, we can press a button and get out when we press the button. And that's a beautiful thing. Just like you can get back in when you want to, when it sets up, and get filled. And that's a beautiful thing, rather than getting filled into multiple areas and prices and things. Does that answer the question, Jeff? So yeah, money management is important to be successful. It absolutely is. I still think the entry is key. And then whatever your personality fit is, which you have to know yourself, will help you determine the money management. Thank you. Does anyone else have any other questions about anything we went over tonight? Any other questions about anything else? You guys have been great. I've been talking for a while. Does anyone have any other questions at all they want to ask me? Feel free. If not, then have a wonderful, wonderful night, you guys. I'm going to put my email here at the bottom. If you're interested in more information in the class, you can email me at melissa@thestockswoosh.com. In either the wealth class or the gap class. So again, the wealth manifestation class is April 18th. It's $350. You get 1 month free in the room with that. And the golden gap class is April 13th and 14th. And that's where you learn all the information how to find and pick and play and rate these gaps like FDX. And the cost of the class is $19.99. And you get the wealth class for free with that, which is a nice compliment to go into earning season. The wealth class has nothing to do with charts. It all has to do with stuff that goes on in your head and about money. And talk about money management, Jeff, I'll just close with this one last thing. If you are in a balanced place in yourself, in your head, in your brain, in your mind, in your psyche with money, you will make the proper money management decisions. You won't have any problems with it at all. The people that struggle with that part of their trading have other issues. That's not something you could write down in a piece of paper in a trading plan, no matter how they figure it out or adjust it or change it or flip-flop and go back and forth. They will never figure it out if they have something that's going on in their head. It's going to prevent them from finding something that works for them to make money consistently. And that's where the wealth manifestation class can really help people, because it delves into some of those deeper aspects of things. That is so important to be a successful trader. Getting to the place where you're making a lot of money trading is achievable as an individual, but many levels of yourself have to be in sync. I know this again from personal experience, and this is the reason I'm teaching it to people. So the Golden Gap class is about getting the strategy and the entries and the targets and the direction right on the chart, and learning really how to trade, advanced technical analysis and everything that goes with it. The wealth manifestation class is about your brain, your mind, your psyche. Those things are going to help you be successful and make a lot of money, no matter what you're doing, actually, no matter what strategy that you're trading. And that they both help. You need it all. All right, thanks everyone. Thanks for coming. Have a great night. If anyone has any questions, email me at melissa@thestockswoosh.com. I hope everyone has a wonderful evening. Go enjoy your dinner. Have a glass of wine, relax. And if you're interested in any information about the classes, email me at melissa@thestockswoosh.com. Thanks and have a great night, everybody.